Historically, whenever gold started to outperform the S&P 500, that always led to massive economic downturns and crude oil crashed. And so because that is currently happening again, in today's video we are going to have a look at the most important technicals, fundamentals and also macroeconomics of this commodity. From the technicals, we have obviously seen that massive reversal from this support at around $55 per barrel here in the end of 2025, and that has really been the beginning of this massive bull run that we've seen since then. But recently we have seen a bearish breakout to the downside here at the RSI, and we've also seen a stagnation here at the volume delta. If you have a look at the hourly chart here, you do see it more beautifully. You do have this support at around $62. You also have this blue overall bullish trend line here, and both of those are currently retested. So you do have those basically converging here, and that obviously suggests we might see a breakout to the top because of both of those are basically currently acting on the price of crude oil. But whether this is actually about to be the beginning of a massive breakout to the upside, that is a question that we can only answer by taking a look at the most important macroeconomics that are the underlying drivers of this commodity. If you have a look at the global liquidity cycle, which is obviously the main driver of all assets, you do tend to see those cycles, and we are currently seeing that we are at the top because this was basically taken here. This picture was taken in 2023. We're actually currently at the top of this global liquidity cycle. And as we're at the top, we might see a reversal. We might see that liquidity is currently starting to get tighter. And that is also what you're currently seeing here on the chart, on the weekly chart of crude oil. You do see those cycles here at those commodities like crude oil. And if you have a look at those following indicators that we've basically prepared for you today, you really understand what happened in the history and what might be happening next. And if you don't want to miss those kinds of videos, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us for our work here on YouTube. And also make sure to check out the Discord server, which is also linked down below, where you can just discuss with like-minded people topics that you're interested in concerning the global markets. And so to come back to this weekly chart of crude oil here, you do see a quite interesting correlation with the DXY, the gold to oil ratio, the copper to gold ratio, and also the gold to S&P 500 ratio. Because all of those ratios are always triggering certain signals before those massive economic crashes happen. For example, here, previous to the great financial crisis, we've seen that the dollar weakened. We've seen that obviously indicate massive economic strength. We've seen that actually coincide to this bubble forming out. We've seen that coincide to oil outperforming gold. We've seen that coincide to copper already weakening against gold. We've seen that that divergence between this ratio and the crude oil chart. We've also seen that gold started to outperform the S&P 500. And this is exactly what we are currently starting to see. We have not seen a bubble forming out, but we've seen that the dollar weakened. We've seen that gold outperformed oil, and we've also seen that divergence here with copper, as it also actually underperformed against gold. And additionally, we've also seen gold actually outperform the S&P 500. In fact, if you measure the S&P 500 in gold, it hasn't really topped recently. It actually topped already here back in 2021. And that is really important because you have to understand that whenever you do have a look at the S&P, that's a delusional chart because it's measured in dollars, and the dollars can be manipulated, and that's exactly what all of this liquidity cycle theory is about. You do see cycles that are driven by excess liquidity and shortened liquidity, and it seems like we're at the end of this cycle. It seems like we might see history repeat again. We might see exactly happen what we've seen happen here in previous cycles, and I like to illustrate you that by having a look at the great financial crisis again. We've seen a massive downturn happening here at crude oil, which actually has been triggered by the DXY increasing. We've seen that the dollar strengthened. We've seen that gold outperformed oil. We've seen that ratio starting to rise, therefore. We've also seen that this ratio here between copper and gold collapsed. We've seen that obviously copper really underperformed against gold, as gold is this safe haven asset. And similar things go for the gold to S&P ratio, as the S&P obviously dropped significantly. We have seen, even though gold also dropped against the dollar, we've seen that gold has actually outperformed the S&P 500. And the dollar is probably the most important aspect of this chart, because it really shows you that whenever you do see this stimulus, this weakened dollar, you do tend to see it actually coincide to crude oil also rising. And whenever we've seen that trend line here being hit, whenever we've seen that the stimulus actually reversed and we've seen this dollar strengthen, that coincided to a lot of tops. And we're currently hitting that trend line again. And so that is quite concerning to us at Chronos. If you take this chart, if you take this empirical evidence, that would, if you just have a look at the data rationally, that would actually suggest we might see a strengthened dollar. We might see a big downturn here at crude oil. We might see this ratio here at gold to oil actually continue to strengthen because of those divergences that we do see at copper and gold, and this gold to S&P 500 ratio is also skyrocketing since few years now, and that always led to massive downturns, and therefore we are quite conservative concerning crude oil. Now we have recently seen that big reversal here from this support at around $55 per barrel, which actually is a really important support level. It has been also retested here back in April of 2025. And so this seems to be the ultimate point of capitulation, but we can see some rally continue unless we do see, to the point where we do see this crash happen that we've just talked about. And so this is not to say that this is the ultimate end of this rally here at crude oil that we've seen start recently, but it certainly can be. We have recently seen that this level is currently being retested again, and we might obviously see, we obviously do see this potential for a coming crash here. And also concerning this bearish breakout here at the RSI, we do have some bearish potential left here at this chart. And also concerning the fact that we have recently seen those lower highs forming out. And so it looks like a little like a top that could be in here. But obviously, this is quite hard to predict. We could also see momentum shift again. We could also see this leading to a continued rally. You obviously have to take a look at the broader cycles, at liquidity, as is the main driver of crude oil. And historically, a lot of signs are currently showing that we might see history repeat. We might see a bigger crash coming up next. And so the risk seems to be higher than the reward for chasing this run that we're currently in, which is our final conclusion of this video. I hope you enjoyed the video. I hope you learned something new. If you did, please make sure to subscribe to our channel and like the video to not miss future videos. And if you have any questions or want to give us your opinion, don't hesitate to put them in the comments down below. Thanks for your support. See you the next time. Bye bye.